All right, let's jump into our daily market recap here for Monday, September 18th, 2023. Let's dive into the market, take a look at what we saw today. And pretty much a flat day overall in the market. A little bit up, a little bit down, and a lot of sideways as we head into FOMC meetings, which start tomorrow, and then we'll get the details of those meetings and any interest rate announcements, which we're not expecting any of that to happen on Wednesday. So I would expect it to be a pretty nothing burger overall. The odds of the Fed raising are limited at best out there. And I think you're going to see the Fed. I mean, there's a chance of raising in November, but I think what you're going to see is a lot of talk about leaving rates alone. For everybody that thinks, oh, they're going to cut this year, they're going to cut first. I don't think so. Don't see the Fed cutting anytime soon. I just don't see a lot more of rates going up, but maybe we'll get one more, who knows? But I think they'll give a pause at this meeting, and then we'll see if we get another one next meeting if the numbers are still hot like they were last week with CPI and the PPI. Let's just jump into the market, take a look at what we had. So SPY was up just fractionally today. Nothing much to really talk about as a whole. If we really look at it, we still have on the weekly here, we've got lower highs and a lower low and one lower high here. MACD falling, RSI falling on the weekly. And if we look at the daily chart here, you can see that we've got a series of at least lower highs coming in. We're going to see if we get another lower low, which we have not seen. But you still have this head and shoulders-ish looking pattern forming. Really is not a head and shoulders until we come back down here somewhere along the neckline around 432 to 435, somewhere in that range. Until then, it's not really a head and shoulders. It just looks like it could become one. But MACD dropping on a day, RSI continuing to drop on SPY. So nothing exciting to report on SPY, both in a bearish PSR mode. If we take a look at the Qs, pretty much the exact same thing. We had a slightly down day today, almost a flat day, nothing to report, nothing major broken, heading lower on MACD and RSI on both, which means a whole lot of nothing here. And then let's take a look at IWM. Now, this one did have a little bit more down than the other two did. You got the MACD and RSI dropping on both, and has been the weakest of the sectors out there recently. And breaking below on the weekly, it's below all of its major moving average, below the 200, below the 50, below the 21. And over here on the daily, you're right at the 200, and you're below the 50 and the 21, with the 21 leading the 50, below the 50, heading down. So not too good looking on IWM. If we take a look at the amount of stocks over their 50-day moving average, we continue to just hold right in this 34% number. We've been between 30 and 35, 36%. We've been there for, I don't know, what is it, 5 weeks or so on average. So we've been there for quite a bit. Not necessarily a bearish sign, not a bullish sign, pretty much just stable in there. Take a look at the VIX. It did essentially nothing today, closed the day right at 14. So we've got a 14 VIX, very low volatility. VIX, again, based upon 30 days of volatility, where you've got a lot of 0 DTE that's impacting the majority of that 0, 1 DTE. VIX is never going to move anywhere, so not really much of a thing. The US dollar, though, we did get a little bit of a break today. So US dollar dropped fractionally, but it did drop a bit today as RSI on the daily coming down again, once again, for the, I don't know, fourth time coming from overbought levels, but really not able to get any momentum to the downside. Now, we'll see how the rest of the week goes. We've had a lot of straight up weeks on the weekly here. So as we're looking at the weekly, just been moving up, up, and up, and up. But now will RSI and MACD tip down, and do we get a little bit of a pullback, which who knows where they could be? Could be just down to this previous support level here, or resistance level that became support, could drop down to this previous resistance level, which is now support. Either way, we could really welcome the US dollar taking a little bit of a break. And then if we look at bonds, fractionally up today, up 0.5%, down at really down at these lows that it's been at for now several weeks, just not able to get going. And the question to me to everybody else out there is, why would you want to get long bonds here? Do you think rates are going to continue to drop? Well, the Fed's not cutting. The Fed's not going to cut, at least not anytime soon. And I'm going to guess this Fed's going to hold these rates steady for a lot longer than people think. Now, does that mean we haven't bottomed? Maybe. We have bottomed in bonds, but there's not really much of a catalyst to move higher. So just because the Fed's not doing anything, I don't know what the catalyst is to push bonds higher. Everybody going to just jump into bonds all of a sudden? I don't know. But we'll see what happens. Nothing exciting going on the TLT. Quick look at futures. 6A, your Aussie dollar, up on the day because US dollar is down. If we look at British pound, same thing, up fractionally on the day. If we look at the Canadian dollar, up decently on the day. We look at the euro, up decently on the session as well. So all of the Forex futures up on the day, which is really good for us. Since we have some strangles on the Aussie dollar, which doesn't follow the euro as closely or the dollar, but it still has some impact there. And then oil. Did we get a break on oil? We did not. Oil, another up day today, up to 92.33 on oil, which was another 1.7% increase in the price of oil. This is a very inflationary looking item, as you see here. We are overbought on both the weekly and the daily, and continuing to rise. This is as overbought as we have been in well over a year and a half now. So we'll see what happens. But overall, and you got another up week in the making on oil, but you are extraordinarily overbought, but we can stay there for a while. We'll see what happens on oil. Gold also rising today. So when the dollar drops, lots of good things happen in the market. When interest rates drop a tad, lots of good things happen. So you get the dollar dropping, you got bonds a little bit higher. Both of those things good for the markets. And gold reacting positively here, just in this sideways consolidation type of a thing here, just getting more narrow. See if we get a break one way or the other. But this is great for us in our strangles. If we take a look at the lean hogs here, fractionally lower on the day, about 1%. So I shouldn't say fractionally, but 1% lower on lean hogs. Totally fine for our strangles here. Nothing to do. And live cattle pulling back from a recent high. Live cattle is a bit overdone. Let's see what happens if we get some consolidation on live cattle in here. But you can see that this is a fantastic uptrend as well. So between lean hogs and live cattle, but live cattle, man, look at this uptrend that you've been in. I mean, people talk about NVIDIA, but you're really missing the boat if you talk about oil here. This recent uptrend in oil. Look at this thing, how parabolic this has been from, just in July 1st to run from 70 to 93. That's a pretty good jump there, 20 points in just a few months, 29%, almost a 30% gain in just about 2 months. July, August, and September. So now we're only halfway through September. So 2.5 months, almost a 30% gain in oil. mean, it's doing better than most stocks, and the same thing can be said with live cattle as well. This has just been a strong upward moving trade. It's gone from 130 back last July up to about 186 here. So about a 50% increase on this thing in just over a year. All right, let's take a look at some of the sectors. Positive sectors today. Tech stocks were up fractionally, 0.5%. But the XLY, your Tesla and your Amazon, those were down 1%. But XLC up, XLE Energy was up, financials up slightly today. Your big down sector was biotech, was down pretty heavily today. Industrials up fractionally, and then the regional banks took it on the chin, down almost 2% on the day. So not banks as a whole, not looking great, although financials holding in there, but that's not all banking. But your regional banks, they're still not looking too good here. This has not been a good year, and not been a good couple months for the regionals. All right, take a quick look at some of the stocks that are out there. We talked about Amazon and Tesla, both of those down. Tesla was the bigger loser today out of all of these tech stocks. Tesla down 3.3%. So pretty big down day on Tesla as this continues to look pretty weak in here. So you've got the weekly starting to flip over, but the daily's just been in a couple-day downtrend after hitting some new recent highs in the last week or so. Apple up decently today, so Apple had a decent day. Microsoft down, so here's your tech stocks. Apple up, Microsoft down, Netflix was down, but CRM, Adobe, AMD all up fractionally on the session. So that's where we are in the markets, just kind of moving sideways as we head into the Fed. Probably a lot of choppy action the next 2 days as we await the Fed announcement of where they're going to go, if anything, with rates now and in the future. Let's take a look at our accounts. On the 18th today, ended the day with a 212 delta. It's actually showing 194 in after hours, but that's okay. We'll take the 212. So we're pretty delta neutral on our portfolio. So of the three things that we're paying attention to, delta being one, 212 on the delta on a $306,000, almost $7,000 account. That's pretty delta neutral, 0.07%. Really like it right where we are. Theta, 1,072 on our theta. So our theta, 0.35. That's as large of a theta as we have had, I don't know, going back, several months. It's hard to even find one going back months that's this high as it's been. So good theta for us here as we look into this 1,072, which is 0.35%. So our second Greek that we really focus on, theta, we want that to be around 0.4, 0.3 in these low vol environments. So we're right in our range on theta, loving where we are. Another new all-time high in the portfolio today. So another great day from a net lick standpoint. 306,663 was the closing price on it. So up nicely today in the account. Everything seems to be working well right now. So our net lick is continuing to climb. So another up day in the portfolio as we continue to hit new highs after new highs in here. So another new high this week and a new high last week. BP usage bumped up a bit today, 205,537, which is 67%. So BP jumping a bit. I saw a couple members in the Discord talking about how their ES buying power did jump on the session a bit, even though we were pretty mixed and not down, not really up a whole lot. A lot of people were talking about how their BP looked to have increased today on ES. I don't know if that was a brokerage thing or what have you, but ours did, 205,537, 67%. However, again, 10% of that is in BIL, which is the 1 to 3 month T-bill. So we subtract that 10% out, we're technically sitting at about 57, a little higher than our 50%, but nothing to be super concerned about in here. We'll see what happens when some things settle out in the morning. And we picked up $550 today on realized income. So we continue to keep our month going. We are now up $4,731 on the month. 1.6% is our monthly realized income, and our net lick, gotta fix this because our daily adjustment, net lick's up 8,105 on the month, 2.9%, so we're almost at 3% on the net lick, and that's the goal here, is to keep hitting 3% really in realized, but we'll take it on the net lick as well. If the realized is hitting where it should, the net lick should be coming along with it. So let's see where we took in $550 today, and that's our good old zero DTE trades. So we had another zero DTE trade today. Well, I'm going to pull up and we're going to walk through that trade and show you why and how we did that particular zero DTE trade today. And we don't always leave these on to expire, but that's what we did today. So we sold the 4480 4500 call spread for 55 cents. We did 10 contracts of this thing, and we actually let it expire instead of taking it off at 50%, since all indications were that we were not going to be moving a whole lot higher on the session once we put this on. So that was a $550 winner. Another win in the spec trade column here. 2.8% return on capital. We'll take that for the day, in a day where really nothing really much happened. So we were able to put on a nice call spread. And let's see why we did a call spread here. All right, so let's share and go back to our chart. So here's the chart. We're going to look at my trade. So at 11:46 today is when I put this particular trade on. So we put it on at 11:46. So I'm going to zoom in a bit. Now let's take a look at the 15-minute at roughly 11:30 or so here, which you're right at this particular candle. Your MACD was moving higher. Stochastic momentum though was oversold at 11:45. So this was is overbought as I've seen. So we were overbought heading into this 4465, which the 4465, 4470 GEX levels, we took a look at those today, seem to be where we had really our positive transition area. So it was a transition area. I felt that would be some resistance in there. At the time, we were overbought on the 15-minute, but if we look over on the 3-minute, so the 15-minute a little bit overbought. Should say we were decently overbought, but not quite on MACD. We might have jumped the gun, got in a little early, but we jumped in right here at 11:46 technically, but I'll count 11:45 right in here on this particular candle. And you could see that down here, MACD had already begun rolling over and stochastic momentum had begun rolling over, and RSI was into the overbought level. So I'm watching MACD rolling over, I'm watching stochastic momentum rolling over, and I'm watching the RSI in an overbought territory. I thought that was a great place to get in. Could I have waited till 12:30 to get in? Probably that was the best time when you're looking at the 15-minute that, hey, we just can't break through here. And you're starting to now see it rolling over right around 12:45 or so. And that's really when, we climbed a bit higher. So again, I was somewhat premature on this thing. We did dip. We ran back up to 44.66, and then right around that 12:45 range here, this is where, again, stochastic momentum started heading down, and so did RSI and MACD, and that's where it broke. So I was a little early, probably should have waited. I just kind of had this feeling and looking at the GEX levels. which is not a great way to trade, but the evidence presented itself strongly at 12:45. And once we started heading down, we really did not see any recovery on MACD. It was a straight down day, RSI, and stochastic momentum on the 15-minute. They just told you we were just going down, and there was no recovery the rest of the session. Now, I know there was a little blip here the last 2 minutes, but we sold to 44.80, so really wasn't too worried about us rising up 30 points in the last 6 minutes of trading. Otherwise, it was just a down session to that particular point. S&P did finish flat, but that's how we play our zero DTE. I'm not putting on a iron fly at the open and watching this thing go up and down. I mean, if you looked at the market, I mean, you were up, you dropped, you ran, you dropped again. I'd rather play the directional methods, just using some of the internals and using some of the levels that we're seeing out here. And I really felt that that was the perfect level for us. So there's where we are on the trade for the session, $550 to the good. And we had a great day in here. Big gain on the Netlick, and a decent day gaining some on the realized gains. Sorry about that. If you like this and you felt some value out of it, please go ahead and click that like button. Go ahead and subscribe. We'll be putting out some new content soon, so stay tuned for that. Everybody take care. Enjoy a great rest of your day. See you in the markets tomorrow. Take care, everybody.